Thanks, Crawford, for joining me today.
Hey, good to
Um,
see you, Sarjeet. How are you?
good. There's a lot happening in tech, right? So it's a sort of brutal day in tech right now today, but it has been up like crazy for the last couple of months now. Oh,
Absolutely. We're seeing an unprecedented time in tech. We're seeing demand like we've never seen before, and you really saw that in the earnings this week. Strong earnings across the board, and powered by this continued infrastructure move to AI.
yeah. Actually, the if we can talk about how do you see the current landscape? The all these different vendors are trying to get the attention of the buyers, if you will,
Mhm.
especially from the AI side. So how do you see this working? Actually, then we can jump into earnings in a couple of minutes.
Yeah, absolutely. So I like what you're saying. Let's start at a very, very high level. And at IDC, we track all these markets. So starting at a very high level, you and I have been in this industry for many, many years, and we're seeing this fundamental shift to AI-based infrastructure. And we have seen this incredible CapEx build out that's been happening in the face of a potential trade war. So, in the U.S., we saw a GDP print this quarter, and we saw one last quarter where they're not very impressive GDP. We're seeing anywhere from slightly negative to in a with a 2% handle on it. So not a great economic environment, but even with that, we're seeing high double-digit server growth. We are seeing software as a service growth that is over 15%. We're seeing software growth in aggregate that's over 10%. IDC we just recently announced our numbers for total IT. We've upped our forecast to 11% for the year. Now, before that, Sarjeet, we had been in a band of between 5 to 9%. So we actually broke through the top end of that spending band for our expectations for what we expect to see for 2025. So what are we seeing? We're seeing that there's an old expression, FOMO, fear of missing out. And we are seeing that on the IT supplier side, there's all kinds of FOMO in even a tough economic environment to not miss this next wave of the industry. And then on the IT buyer side, you're seeing that boards are consistently saying, how are you going to capitalize on AI? How are you going to make sure that your competitor doesn't get to AI faster and disrupt you? And how are you going to unlock growth from AI? So there is a massive bet that's being made, and you can see it in every single category. You want to look at phones, you'll see phones incorporating AI. You want to look at PCs, you'll see AI PCs, over 100 SKUs announced. You want to look at the cloud or software as a service. I mean, how many AI companies and software platforms have we seen integrate AI? And then as you go up the stack, you're seeing that AI is being integrated into services. It's being integrated into basically every device. The way this is forming is, I like to compare it to sedimentary rock, and that the bottom sediment is the chips. And that's what you saw with NVIDIA. And you're seeing a massive disruption of Intel. You're seeing AMD pivoting to get more involved in AI, and they seem to be having some great success. Thank God they bought ATI way back when. And now you're starting to see that the next layer, which is the server infrastructure, is moving up as well. That's the next layer of sedimentary rock. But now we're starting to see platform as a service, and we're seeing platform as a service clock double-digit growth. Then we'll see software as a service clock double-digit growth. We've seen cloud infrastructure as a service, which I actually skipped between servers and platform as a service. we saw this week, we'll talk about earnings, we saw some companies putting up over 30% growth numbers for their infrastructure as a service platforms. So there is a massive transition that's happening here, and it's really based on not missing out on this AI transition.
Yeah, I think that the FOMO factor is huge, and the capex numbers are crazy, and there are a couple of new entrants actually, which is XAI and Facebook guys, right? So
Yeah,
from Meta, I mean, they did not like intervene in the B2B side of things, but now they are with their models. They are
yeah.
like now XAI models are being served on Azure, and XAI models are served at other different sort of even at Oracle. I think they announced that as well. So other cloud providers are bringing in models from likes of XAI and likes of Meta. That actually muddies the waters. At the same time, Meta's during Meta's earnings, Zuck said that hey, we may not open source some of the models going forward. So there's uncertainty there. So I mean, they have a bad record of serving the developers, both companies, XAI, which is
Yeah.
Twitter formerly, and Elon Musk has hiked up the prices on the API like crazy, actually, on Twitter
Yeah.
and other whatever properties he's running. So, and then Facebook's record with developers is very bad, actually. So I don't know how that will pan out, but yeah, on the B2C side
Well,
and
let's
the
let, let's
players.
let's talk about that for a minute, and because I think it's really important when you think about the strategies these companies are going to put in play going forward. When you think about the major cloud providers, they have built their entire business on B2B technology, a B2B go-to-market motion.
Yes.
I think that the lesson that they all learned in the, what do they call them, the knots from 00 to 2010, is that open source is an extremely powerful way to attract developers to innovate on new platforms. If you look at X AI and you look at Meta, those companies come from a very different place. You were just saying it. Yes, they come from a B2C place, but they come from something else that's very important, which is in a B2C world, you must build a contraption, a machine, a technology, and that technology is proprietary to you. And your job isn't really to bring developers into that sorry, to sell that to other enterprises. Your job is to make sure that your machine optimizes what you do. In the case of Meta, they're optimizing advertising. In the case of X, they're optimizing a number of different things, including advertising as well on the X platform, but also user experience. As to be fair, as does Meta. And so I think when you build the machine to be proprietary and to optimize, you're a lot more leery about moving to open source technology because it's really about the adoption of your experience. It's not about the adoption of your platform as much from a developer standpoint. Now, I think that they will learn, and I suspect that they will have to move more toward open source in the future. But I think given where they're coming from, they're going to have to learn some new skills and some new muscles in order to be successful in B2B.
Yeah, yeah. Actually, their aspirations are to appeal to developers, but their actions don't match those aspirations. And developers are so used to like freebies and or very low pricing in the beginning, at least when you're there building it. So
Yeah.
that's that. But on that note, actually, while we are on that, do you think that like we looked at the numbers and like the AWS numbers were actually at par, a little bit better than last few quarters? I mean, they beat this time by very dismal
Yeah.
0.1%. So the do you think that they're suffering from like what brought you here won't take you there syndrome? Like they have been kings of the cloud, the infrastructure as a service and platform as a service. But going forward, like the mix of AI and the infrastructure and the platform, um, I don't doubt their sort of ability, but do you think the message is landing, and
Yeah.
did they have some missteps there?
Yeah, from the customers I talk to and the behavior that I see, I think what you're seeing is that AWS of all the cloud providers definitely suffers from a lack of understanding around how they've invested in AI. And frankly, I think, and maybe this is a little bit misplaced, how they've invested in security. Not that it's not a secure platform, but when you look at what Google's done with Wiz, and you look at so much of the attention that that deal got, I definitely think that AWS would be well served to step up their communications around what they've done around security. But let's get back to AI. It is undeniable that AWS was the pioneer of the cloud. They leaned in super quickly. They moved to this platform, and they are serving more customers than anyone else on the cloud today. That said, there's a very complicated maneuver that cloud providers need to execute right now, and that is, think of the capex dollars that these companies have as a big bag of money. And it's not just the capex dollars, but it's also all the other dollars that they have in their organization. And these companies are being asked to build out, on speculation, an AI platform that they have to figure out how to monetize. And I think Microsoft has done this beautifully, where they've managed their capex spend, which has been absolutely huge, by, frankly, taking from other parts of the organization so that they don't impact their profit line as much as maybe they could if they weren't as closely managing it. I think Microsoft has done a particularly great job of this. I think in the case of AWS, it's very complicated because they're serving more customers than anyone else, and they have to invest considerably. And investing in that AI technology and that AI build out, I think that some of the things that probably caught some of the investors' eyes were some of the pressure that the company is seeing on their margin model going forward as they invest in this technology. But make no mistake, AWS, I think, is in a transition right now. I believe they will be super relevant in the AI game, but it's going to take them probably longer than anyone else to continue to maneuver and turn this ship as they attract customers and get customers to see the benefits of AI. If you go back, Google and Alphabet, they went early on into AI, even before a lot of other companies, and they really captured some of that brand equity and market perception around AI, and now have delivered on it, both on both on Google Cloud, and as well as some of the more front-facing experiences of Google Cloud, like Gemini. And I think that AWS lacks that ability to kind of show and demonstrate how a mere mortal could take advantage of AI. And I think that is something that, when you think about the perception wars around AI, that, AWS really needs to think about it in terms of how they demonstrate the use cases associated with AI. Not a problem at Microsoft. We'll talk about that in a minute. Not a problem at Google, but a bit of a challenge at AWS.
Yeah, actually, I think the fact that they just open sourced Strands like a few months ago, like
Yeah.
3 4 months ago, and they have their own native IDE, and that's actually very well received, which was launched 2 months ago, actually
Yeah.
in May, and we got to see that, we got to taste it during the New York summit. So I
Yeah.
think that those
In New York,
they are, yeah, they're moving fast in that direction. But at the same time, I think there's one actually thing which kind of makes me wonder why there's a big backlog at these companies. Actually, let's talk about the backlog a little bit. So there was a BG2 podcast. Actually, I listened to them. It's Brad Gensler from AltCap, and Bill Gorley. Actually, they're
yeah.
Silicon Valley veterans, investors, and very smart thinkers. They had an episode couple of I mean, about a month ago, where they talked about the GP allocation from NVIDIA to all the players, right?
Yeah.
And there's some skewed GPU allocation skewed towards Oracle and CoreWeave. I mean, it's a friendship and investment, from from Jensen there, right? So that's skewed on the one end, like they got more proportionally more than they we industry thinks they should have, but AWS got less than their share, I think, if you keep in mind their cloud market share. So it to me it seems like either AWS didn't want to bet big on buying too much of Nvidia, or they want to push their own chips. Actually, they were actually in between pushing inferential chips and their own native chips, like the messaging was getting like intense, but then
Mhm.
they pulled back like recently now. So I think they maybe misjudged the force Nvidia has.
Maybe. I think these allocation conversations are always, whatever you're allocating, they're always extremely complicated, and there are ways to maneuver those allocations. One of the ways is to pay up. One of the ways is, if you're willing to pay and get, further up the line, that can benefit you. In terms of how the allocations are often divvied up, they're not always divvied up by market share. They can also be divvied up by when somebody got in the queue,
Yeah, yeah,
price points, all those things. If you look at a company like CoreWeave, if they don't get NVIDIA parts, they don't have a business, right? There is no business there. It's a lot more complicated when you get to somebody like AWS. Additionally, AWS has a captive product that they're developing, as you referenced, and so I think they're probably trying to figure out how much of this product can I get built with my foundry partner, and also how much adoption am I seeing in the marketplace. What I'm taking away from the announcements we saw this week is that there is a significant customer preference for NVIDIA, and that the
yeah.
amount of demand and backlog for these NVIDIA parts doesn't appear to be abating anytime soon. And so the renovation of the infrastructure needed to support AI workloads is probably larger than anybody thought, which means that those companies that were very smart, those companies that made the bet, those companies that were able to jump to the front of the line are benefiting right now. And I think that we're going to see for a long time companies try to develop their own platforms, their own software on top of these platforms, and again on top of their own semiconductor parts, and that's probably going to take longer than they ever thought. And so I think if you're AWS, all the problems are really bigger because you're such a huge part of the cloud marketplace, and that's probably the root of the problem more than anything else, is that it takes a lot more to move the needle there.
Yeah. Actually, on the plus side, actually, I always praised AWS for inventing on the all strands of the infrastructure. They go to the lowest level, like at
Yep.
the NIC level, and how the data is received, and they have DPUs, and I mean they pioneered that sort of mechanism of offloading the calculation load of encryption and decryption from the CPUs back then, and now from GPUs now, because they have DPUs, right? So when the data hits these switches, it's encrypted and decrypted at that point.
Right.
So yeah, I mean they are innovating at all levels, but I think the
They're innovating at
messaging.
all. They're innovating on all levels, and again, like I said, the problems are even more complex when you think about those kind of end-to-end systems.
Yes, exactly. Yeah, yeah. They have to put a cohesive message out there, because the two pizza teams, like, they don't want to take credit for their products, but then how do you message around so many teams building so many things, right? So it's a
Well,
challenging.
and also your messaging has to be, to be fair to AWS, as it has to be incredibly targeted to
Yes.
those specific people that are trying to get those pretty highly technical jobs done. There isn't kind of a general B2C message here. Makes it a little bit easier to understand where you play. And by the way, I see this a lot where customers, oftentimes enterprise customers, will ask me, how does Meta fit in again into AI? And it's the other side of the spectrum, but it's that same problem where it's hard to visualize how they're going to fit into the enterprise AI game if you're not really close to it.
Yeah, actually, yeah, true. Actually, and the capex actually is another sort of barometer, like who's investing how much. And there was some jabs during the earnings call. They were taking at each other, right?
Yeah.
Actually, CNBC said, "Oh, Microsoft deviated from mentioning any competitor or taking stabs at them." But I think they did, because when Satya did that said that, like, being a hoster is different than being a hyperscaler. So he was taking stab at AWS, like he called them hosters, but they are not actually. Their software game is as good as anybody else's, I think.
Yeah.
But
Yeah,
he did that.
I noticed that as well, and I think that what he was really getting at was that he wants credit for the interdependencies of his systems and how he's engineering his systems for what he believes is a next generation to be a next generation hyperscaler, and I think that was a way for him to take a little jab there.
Yeah. Well, you pushed it a little bit, and then on the flip side, actually, Andy Jassy also pushed a little bit. When he talked about the security posture comparison, and he also said that the second cloud is about 65% of AWS. So he kind of talked about the size of number two, which
Well, this is my point about it just takes more to move the needle
yes,
at AWS because of the girth, the largesse that they have in the market, and that means that from a supply standpoint, from the amount of share that they need to gain, and that they need to gain is always going to be harder. And I kind of took what was underneath that comment was, we're big, pay attention to us as we go. A large part of the market goes, and
yes.
he's not wrong in many cases when you think about how much success they've had in the cloud. But having said that, he can't leave a lane for AI, and I think that lane for AI. I'm not saying AWS is not investing in AI. I'm just saying that you can't leave that AI for a competitor, because right now it feels like Microsoft's running down that lane.
Yeah. It's a developer proximity, developer messaging, developer related training, and having developers on their side is has always been the case, actually, in high tech, and it's still true in AI. Actually, AI. Recently, I tweeted about this, that AI is not substitution for automation. Actually, it begs even more automation. When you are building anything at certain scale, you need automation, and that means you need platforms which are secure, which can scale, and which have all the abilities of the software we usually talk about.
100%.
And by numbers, actually, the if we just look at the quarters, AWS did 30.9, almost 31 billion. Azure did 18.75. If I divide their annual number, they didn't give the actually
Yeah.
first time they gave us the actually Azure numbers, but if I divide the annual number by four, it's 18.75 billion, and Google is 13.62. So it's 31 versus like 19, rounding it to 14. So these are the numbers of four
Yeah, and you
steps.
might
So
be dividing it by four might be understating it a little
yeah,
bit, but
yeah,
yeah.
yeah. No, actually, just to
Yeah,
getting
get
some
an idea.
ballpark, because
Yeah.
they did not give us actual number. They
Yep.
gave us annual number. So, anyways, that's good. So, let's talk about the I mean, like, we usually, when we talk, was like, we need to calm the nerves of some people, right? Because people are like anxious. Developers are anxious. Am I missing out? The the CXOs, CIOs at some companies are like, am I behind? How do you how will you guide them? Like, hey guys, like, is are we? They should push pedal to the metal, or they should go slowly, or
Yeah. So
what do you?
let me summarize it this way, and that is that we advise so many IT buyer customers at IDC. This is the first. I think this is the first technology that we've ever seen that we have said, don't wait, run to this technology, embrace this technology. This technology is the future of your organization, and I think customers largely understand that. I don't see a lot of customers that haven't. They've scrambled, and now they've thrown a lot of money at it, and now they're looking to justify those investments. I think the next phase, once we get through the POCs that have been developed over the last couple of years, which we are getting through now, is where I think the real change is going to come. I think that as AI begins to permeate different departments within IT and outside of IT, we're going to start to see some roles be augmented, some roles be eliminated, and some roles be created. And I think that people have become very, very comfortable in organizations around the roles in HR and the roles in IT and the roles in FP&A. And I think those are all about to change. And I think the companies that use AI to think about how they can transform the workflow in their organization as the data flows in different directions, those will be the companies that unlock the real value here. And we are about to, and that's why I'm so excited about what some of these companies are doing. As we start to unlock the power of unstructured data with AI, we're going to see people gain so much efficiency in organizations, and we'll see new roles get created. And for 2 years now, we've been talking about how all these jobs are going to be eliminated, everyone's going to die, it's going to be terrible. I don't think so. I think we're going to see roles change in organizations. And it's the companies that are waiting to see how roles change are the companies that are most at risk. It's the companies that are running to AI and changing their organizations with this new power. That's really, I think, going to be a big differentiator in the IT buyer community, and who sees success and who doesn't. Now, going back to the suppliers for a second, this is what I think is so interesting about Microsoft's strategy and about Google's strategy, which is they have so much of a footprint in companies' unstructured data and in their structured data. And I think that being able to demonstrate to customers how they can unlock value across both those platforms is going to be incredibly powerful. And I think we're just at the beginning of that journey for customers.
Yeah, actually, I think AWS has to rely on their biggest customers to bring in those case studies, as compared to it. Microsoft can showcase their own, eating their own dog food, or like they can showcase like how they're using it, and so can Google, because their properties are different. Actually, these three companies are comparable if you peel the layers, but not at the surface. You can't compare these companies as is, because they have.
No, I think you have to really start getting into how they're enabling AI for customers. And then you can, and again, it also gets to their partnership strategies, right? In terms of, how they think about that data layer and how they think about being present in that data layer in the case of like a Microsoft, partnering with a Snowflake, for example. But I do think that the raw material for both of those companies puts them in a very, very interesting position going forward. When you think about that, that the way people are using their customer facing products, I'm thinking specifically around the Office products at Microsoft, and so much stuff that's being created there, as well as the similar products that Google has. I think those are going to be incredibly valuable assets as you start thinking about solving enterprise problems going forward.
Yeah, actually, Dave Vellante did great. Dave Vellante did great analysis. Like he posted it yesterday. He called the SaaS being the shock absorber for these two companies. Definitely,
Oh, it's
he actually
interesting.
was
Yeah.
mentioning he was mentioning Microsoft, but I mean Google. You can apply the same logic to
Yeah,
Google, even though.
Google, and again, you think about it. The footprint Google's been making over the last few years is very, very significant.
Yeah, it is. Yeah. Okay. How do you? Okay, let's talk about macro kind of stuff. Like the IPO market is opening up. Like there were a couple of good ones. Like so the
We
crypto
saw Figma, and then earlier this year we saw CoreWeave, or maybe it
core
was late. Yeah.
Circle. I mean, Circle, CoreWeave, and Figma, the three big ones, and Figma was crazy actually yesterday.
Yeah.
It tripled in value just at the opening. Crazy, how Adobe kind of missed it, and I mean, they could have pushed.
They didn't miss it. They
They
tried.
tried, but they did not try enough. I think they
Yeah.
just they both agreed. Both parties agreed. Like, okay, let's depart. If Adobe pushed it, I think they could have got it. But Adobe, I think, got scared. Adobe is sidetracked in the whole thing. I think, like
Yeah.
their stock is down by I think 25-30% in last 1 year, which everybody is going up and they're kind of going down.
Yeah, Adobe for I think a lot of investors is a complicated story to understand. There's so much going on there, and I think that the company would be well served to really pivot back to data creation and how people manage their not only their data but their content, and really simplify a lot of the products that they have in order to pull a more cohesive story together. Whereas Figma tends to be, as Adobe knows, right? It's more of a straightforward story to communicate around creators.
Creatives, yeah. Actually, I think my critique of Adobe has been for many years now, because I'm their user of their products as well, is that they downplay the automation. People who
Mm,
do things like repeatedly, right? They need automation. If you edit a video like once a month, you don't need automation. But if you are doing editing videos all the time, for
mm.
example, that some agencies do, I mean, like, why can't I stitch intro and outro with an API call? I mean,
Yeah.
that's not there. I mean, it's like, hey, we are in 2025 era, and then you don't have APIs for this. I mean, like, that's a big miss, I
Yeah, it
think.
does seem kind of strange. You would think that, there's a lot of repetitive tasks and you'd be able to easily automate that. But even I think going through that, when you think about the entire spectrum of Adobe products, it's a
Yeah,
complicated story.
it's very complicated. Yeah, it is complicated. Yeah, it's like be careful what you wish for. Like you want to be
Yeah.
big, but at the same time, managing the bigger things is
But
harder,
when
right?
when you look at the IPO story, I think what you're seeing, and Figma um, kind of plays into this, but certainly we've seen it in some of the other, and I think you're going to see it in other companies as well, which is it's a bit of the echo boom associated with AI. And that is that we saw this huge explosion in AI and how people are working differently. And now we're seeing a lot of the companies that are either powering that in the case of like a CoreWeave, or companies that are associated with it in some way are going to start seeing the benefits of these IPOs. I would actually argue that the IPO market was never closed. It was just the expectations were very, very high, and that meant that you really had to be a super, super successful company, which means that you really need the tailwind of some product that nails a specific job, like a Figma, or you're attaching yourself to this AI boom, which is unprecedented. It's something the likes of which we've never seen in the industry before, and I think we're going to see more of that as and you can sort of pull all the way back to the companies that are getting funding now, whether whatever AI company you're talking about, those companies 3-4 years from now will likely be the next mega IPOs on the tech side that we'll see.
Yeah. Usually the cycle was around 7-8 years, and then they prolong to, like, many companies are like 15 years old and they're not going public. So
Yeah.
it's a like a new expectations, new trends, and and I think the IPO market opening up helps the VC community as
Mhm.
well as the M&A on the B2B side. Because more investment means more companies, means more M&A. So, and
Well,
M&A stance is
it
getting.
does a few things. It does a few things, Sarjeet. It makes those companies flush with cash, which means, of course, they can acquire. But what it also does is it creates benchmarks for valuation, and
Yeah.
that allows you to start to see, okay, what is this company worth? What should I be actually paying for some of these companies? So there's a few benefits of it.
Yep. Yeah. Actually, you gave me 30 minutes. Actually, I don't want to like you to be late for the next
Yeah,
thing
yeah.
or
Actually,
something like 10.
we should probably wrap it up in a minute.
Yes.
But anything else?
No, no, you tell me actually any other observations you are making out there. I mean, you guys are IDC, and then you guys see a lot.
Yeah, so I would just say that, as we get into the next 30 days, it's going to be a very, very interesting period for IT demand. And obviously the impact of that, a lot of it has to do with the impact of tariffs. And as
Mhm.
we're rolling out tariffs over the course of August here, we're going to see how much of that actually um, impacts consumers going forward, and enterprises, and how much those enterprises have to tighten their belts around what will likely turn into will definitely turn into higher prices at some level. We are watching this very, very closely, but even in the face of that and that uncertain outlook that we're seeing for the second half of the year, we feel confident in increasing our IT spending growth. It's really quite extraordinary. And as I said, like that set of that rock keeps getting built, and it's getting built from the bottom up. And we don't really see a significant headwind for that. Now there'll be little moments. Areas like devices tend to be a lot less resilient. Even though we are going into an iPhone upgrades, we're in an iPhone upgrade cycle right now. So we'll likely see some chop in some of those markets. But I think the reality is we're looking at a strong year this year based on all the indications that we see.
Yeah, my last actually question I will ask you is like, which I wanted to cover, is that if you allow me, is
Yeah,
that
sure.
yeah the like the like we have been talking with the hyperscalers more or less actually during this discussion. How about the likes of SAP, Salesforce, Oracle, ServiceNow? Those people actually they're benefiting from this wave as well. And we during the IBM thing we talked about when we sat down on camera, we talked about the incumbent advantage. Incumbents have advantage. They have the process knowledge of the existing workflows, and can they tap into that and then make business out of that, like of SAP and Oracle especially, because and Salesforce, they are three top SaaS
Yeah.
companies, if you will.
Yeah, yeah, and I think that trend continues. I think that when you see how a company like ServiceNow is really going after that CRM segment so hard, you can see that they're going after different workflows and want to connect different workflows in the enterprise. Candidly, Oracle, I think, is just done an amazing job of actually taking their end-to-end story that they started with the acquisition of Sun Microsystems way back when, moving that into the cloud and creating a way to differentiate performance in the cloud. And I think Oracle is trading large, very, very much not only on being able to understand changes in workflows in the application layer, but also being able to bring it all the way down into the infrastructure layer. Salesforce, I think, is also in a very interesting position because they are there's so much of a company's lifeblood resides in that CRM system, in that system of record that they have. And I think that their ability to try to connect that through agentic systems to other workflows in the organization, that's going to be their bid in this war going forward. I said it to you back at the last time we were on camera, and I'll say it now. There is a massive war that is brewing in the application space, and it's a winner take all kind of a war. And I think that that's going to be a big story as we move into 26, and these agents are really out there, and what they're fighting for is the control of workflows in organizations.
Yeah, actually, I think that's the tagline or the key. They're
Yeah,
fighting for the workflow,
yeah,
um,
that's what they're fighting for,
yeah,
and each of them have a different bid for it.
control of the workflow. Awesome. Thanks, Crawford, for always for your collaboration and time.
Yeah,
And I
it
always
was so
value that.
great to
Thank you.
talk to you, Sarb. I look forward to seeing you in both of our travels, and continuing to study the industry with you. So great to see you, and I wish you a great day.
Thanks. You
Thanks.
too. Thanks. Thanks for the listening, folks. This concludes our